our evaluation is that at 600, 400, between 500 and 600 sites, we should be reaching EBITDA positive status, which is likely to occur in 2023. So it's a good goal that we have set for ourselves for 2023, and we will be reporting to our shareholders via monthly report on tower builds and reporting on stats and everything. So this is something that our shareholder can expect starting March.
Welcome back, everybody. Francis Létourneau rejoins us. He's the CEO of NuRAN Wireless, Inc., trading on the CSE under the symbol NUR, and in the United States under the symbol NRRWF. Francis, welcome back.
Hello, James. How are you?
I am doing fantastic. Thanks for asking. Francis, NuRAN has continued to announce additional agreements that are worth tens of millions of dollars across Sub-Saharan Africa. Why don't we start with an overview of the most recent agreements that you signed and where we stand with those?
This new agreement that was just signed is the conclusion of a long process that started a year back. With those RFPs ongoing with Orange, we now stand with over 4,000 sites under contract, for 4,500 actually. In terms of big numbers, we are at 800 million US in contracts signed with MTN and Orange for Cameroon, DRC, Sudan, South Sudan, Namibia, Ivory Coast, and now Madagascar, aiming to get a couple more. So that's a big achievement for us, and it just conclude, or I would say emphasize the relationship that we have with those large operator and the need to get this connectivity over Africa from those operator.
All right. So when can investors in NuRAN anticipate seeing this revenue appear on the financial statements?
This is going to be aligned, of course, with the financing, and part of our contracts, there's clauses that talk about subject to financing. So it's really important, and the operator knows about that, even if they are eager to get sites yesterday. So everything is going to be aligned with financing. The next one to come is the signature of EIB loan agreement and the other DFI loan agreement for a total of 27 million, in which we have contributed at the level of 6 million to ignite this 27 million financing. And there will be some more kicking in, James. So we have kicked off already the debt phase 2, which is going to bring financing for an additional 15 to 1,600 sites, depending on the site category in those regions, plus some equity investor in the African business that are waiting to see more results and more site live. So we are working. It will be a financing game, and we will be working extremely hard in the next couple of weeks and months and years to bring that financing. The overall need to achieve our 10,000 site goal is 250 million of capital that need to be raised or generated by our facility to get those sites built. So back to your question, when will we see fruition of this conclusion? Yes, financing will be the key. EIB and the other DFI should kick in quite rapidly. And once we are done with this and get all required documentation, the condition precedent for signing, once we get all of this, we kick it off and we start building sites as we go, and this is going to be an ongoing process for the next 5 years, James. So as the money kicks in, we just do more builds and so on. So we have 4,500 sites to deliver now under the contract that we have signed with the different operators.
Okay, so then what portion of the outstanding financing needs to be obtained through issuance of NuRAN shares?
So the goal has always been to bring that equity at the subsidiary level in Africa. Okay, and this is a mandate and also an objective that we've given ourselves. Moving forward, the capitalization of the public company, so NuRAN Corp in Canada, is also extremely important. Of course, the cash generated by operation will bring back cash to cover the burn and the growth of NuRAN Corp. Is it possible that we do a private placement in the future? Yes, but it's not yet on the table. So we are not planning to do this now, but we are continuing on the equity raise with the African holding structure. But we have a lot of activities with the Quebec government, Investissement Québec, for example, or FinDev, or those kind of organization that support exportation for the Quebec and Canadian government, or even for the company like us. So there's a lot of tracks ongoing. As I said, the build phase for the next 40 months is going to be extremely important and highly dependent on financing. So our key focus and key mandate now is to get those lined up in order to get more site live and generating cash to reinvest and so on. So it's a wheel, right? And the moment you start, then it start ramping up, and this is something that will probably see fruition. Our evaluation is that at 600, 400, between 500 and 600 site, we should be reaching EBITDA positive status. Which is likely to occur in 2023. So it's a good goal that we have set for ourselves for 2023, and we will be reporting to our shareholders via monthly report on tower builds and reporting on stats and everything. So this is something that our shareholder can expect starting March. Once this EIB and the other DFI money kicks in, so we can restart and accelerate the process of delivering new sites.
Okay. So you've been telegraphing to the market for the last 2 years, more or less, that you're going to achieve, or your target is 10,000 sites over 5 years. You're now at 4,500-ish sites under license, under contract. Where are the rest of the sites going to come from in the next 2.5 years?
Most likely in Africa, but a bit will be coming from Latin America, where we have started some activities, business development activities there. But just in Africa, James, there's need for over 30,000 towers to be built in the rural Africa continent. So we will be there, and I think that only in Africa we can probably achieve this 10,000 site. So once we have Latin America kicking in, might just increase this number. But of course, as I said, the key element is to bring the financing, and this is something that we are closing in the next few days. Fingers crossed on this thing. We're working hard to get all CPs met. We're just back to one now to get this ball rolling. But yes, 10,000 site is more than achievable just in Africa by itself. And the cool thing is that, as you have seen in the past, last summer, we announced a group framework agreement with MTN that allows us to tap into a buffet of over 19,000 sites for the operations of MTN across Africa. They are operating in close to 20 facilities or 20 countries now. We have 4 under contract, so we can probably expect to see more of those contracts kicking in with MTN. But we're not stopping there. With their Vodafone / Vodacom, Airtel. You've got Move. You have a lot of operators in Africa to tap into. We're receiving calls. We've met a lot of those guys during AfricaCom, and we're following up on those business opportunities. But to get more and more and more and more contract is good, but the financing is also key to the success of this company.
Sure. So your agreements have more or less been focused around this NAAS business model, network as a service, and in terms of that novelty in the industry, is that actually working out for both yourself and the providers?
Yes, we stand on average revenue per user across Africa of maybe $2.50. And the way our contracts are structured is we split the revenue coming from the end user. Because we've been able to reduce dramatically the total cost of ownership, including CapEx and OpEx for those sites, we can make a good living out of this, generating close to 70% gross margin on those operations. And I think it's close to 50% EBITDA once in full operation. And when we are achieving the 24%, 25% penetration rate on the population in terms of number of active users, but it's a good living for both entities. And you know what? Even for the mobile network operator at this time, and especially early stage in the process, they're not really worried about making money. They're more worried about, I would say, meeting all the regulation obligation, because they pay penalties and fines for not covering the entire country. So that's why the NuRAN business model with NAAS, bringing that additional connectivity or contributing to expanding the connectivity across the continent, is helping them to reduce their fines and reduce their fees and meet their objective of coverage in the country. So we're hitting a couple of birds with one stone by having this NAAS contract for the operator. They make money, they save money, and for us, we make a fantastic business out of it, and a growing business under 10 years, 15 years contract sometimes. So recurring type revenue is key to succeed in this business.
Sure. All right, Francis. So it looks like 2023 is the year that everything sort of becomes cash flow positive for the company. That's great news to hear. Incredible job you've been doing. We are extremely excited for you going forward, and we'll continue to follow the story. Thanks for joining me today.
Thank you, James. Thank you very much.
You bet. Bye for now.